So the Federal Reserve dropped interest rates for the first time in 4 years. It's been talked about and posted about everywhere, all over social media, all over the news sites, definitely the talk of the town. As a real estate agent, I've had a ton of clients and investors reach out to me to fully understand exactly what this means, what this will change, and what they can expect in the real estate world. So let's talk about it. Just a week ago on September 18th, the Federal Reserve met and they announced a 0.5 percentage point cut of federal interest rates, which was much more than what we were originally expecting. And as I mentioned, this is the first time that rates have been cut since 2020. We were expecting about a 1/4 point reduction, but not necessarily a 0.5 point by any means. Experts definitely have a differing opinion on this. Some people say that this is a sign that inflation and the economy isn't doing as well as the Fed had originally hoped. And some experts are saying that this is proof that the economy and inflation is getting better and is trending more positively than originally predicted. The fact of the matter is that federal interest rates were cut by a 0.5 point just a week ago. What does that mean for you as a consumer in the general world? First and foremost, I want to clear up a myth that I've been seeing posted by quite a few people all over social media. That is the fact that the cut in these interest rates does not automatically mean that mortgage rates are going to go down. And it definitely doesn't mean that mortgage rates are going to go down by a 0.5 point. Now, if they did, that would be fantastic. It would definitely stimulate the housing market and get a lot of people off the fence, but that's not what happened. In fact, mortgage rates have gone down, and they had gone down over the last 3 to 4 weeks in anticipation for this rate cut. They were already pricing this rate cut in due to the fact that mortgages are more of a long-term investment. So the federal interest rate cut that happened last week is going to be affecting more short-term investments or short-term lending. So this is going to be your HELOC loans, your credit cards, your car loans, things like that, the things that are going to be affected on a more short-term basis. Now, with that being said, the chairman also mentioned that there is going to be future rate cuts, whether that be through the end of the year or into 2025. They haven't explicitly said how many rate cuts they're going to be doing before the end of 2024, but we know that they're meeting 2 more times, one in November and one in December, depending on what the inflation report states and how the unemployment report comes out to be. This could potentially be a good time for another rate cut. Maybe it will be another 1/4 point at each meeting. We really don't know. That is to be determined. Now, it wouldn't be surprising if we see mortgage rates continue to trend down in anticipation for that rate cut or the potential rate cuts at the end of this year or even into 2025. But with that being said, we are not going to see a 0.5 percentage point rate cut on mortgage rates just because the Federal Reserve dropped the federal interest rate. Now, with that being said, I've had a lot of people come up to me and ask me, well, is now the right time to refinance? And my recommendation would be if you have anything over a 7% interest rate at a fixed mortgage, especially if you're on a temporary buy down and you're looking at that interest rate to go up within the next few months, I would consider talking to a mortgage lender as soon as possible and seeing what your options are to refinance. Right now, conventional mortgage rates are sitting anywhere between 6.135 and 6.325. So it's a huge adjustment and a huge benefit for you if you have anything in the realm of high 6s or low 7s or higher than that. In fact, I recently just refinanced my primary residence just probably about 3 weeks ago. We had a fixed rate of 7.7%. We bought in December of 2023, which was arguably maybe a bad time to buy, but it was the right time for us. And we refinanced from a 7.77 to a 6.25 2 weeks ago, and it saved $600 a month on our mortgage. So if you have anything in the realm of high 6s or low 7s, I would highly recommend speaking to a mortgage lender. You can comment down below, DM us, give us a call or text, and we would be happy to get you in touch with a local lender. Stay tuned as more information comes out about the future Federal Reserve meetings and any future rate cuts we might have in the coming months, the remaining months in 2024, and then into 2025. They have stated that we are for sure definitely going to see rate cuts into 2025. You know how that stuff goes. We've been talking about cutting the interest rate all year long, and they finally did it now as we're getting into Q4. So if you have any questions at all, please let us know. Like I said, we'd be happy to connect you with a local mortgage lender. Just give us a call, text, or shoot us a DM or comment down below. And if you could subscribe and like our channel, that would be fantastic. It really helps grow our exposure, grow our audience, and continue to make these videos. Have a great day.